In our country, cash holds a significant importance, and still many people around the nation prefer the traditional approach of exchange through cash instead of using the banking channel. However, this old habit comes at a serious cost under the provisions of the Income Tax Act. There are various provisions in the Income Tax Act which disallows the expenses incurred by the taxpayers if they exceed a certain limit. Moreover, certain transactions, if made in cash, are in violation of the provisions of the Income Tax Act and attract heavy penalties. In this video, we would understand, as a taxpayer, various cash-related limits depending on our financial activities. These limits are in place to control black money transactions and promote transparent financial transactions. So number 1, cash expenses made by any business entity to a single person in a day if the amount exceeds rupees 10,000 is disallowed. This means that if you make payments of rupees 10,000 or more in cash for business expenses, you cannot claim those expenses as deductions while calculating your taxable income. Number 2, no deduction in respect of health insurance premium is allowed if the payment is made in cash. Number 3, no deduction in respect of donation to charitable trust under section 80G is allowed if cash donation exceeds rupees 2,000. Number 4, you cannot accept loans or deposit or enter into transactions in immovable property in cash if the amount exceeds rupees 20,000. If contravened, 100% penalty will be levied. Number 5, loans or deposit or transactions in immovable property shall not be repaid in cash if the amount in aggregate along with the interest exceeds rupees 20,000. If contravened, again 100% penalty will be levied. Number 6, sum exceeding rupees 2 lakhs shall not be accepted from a person in a single day or in respect of a single transaction or event. For example, if you plan to buy a car or jewelry and the transaction amount is above rupees 2 lakhs, the dealer, that is the person selling the product, cannot accept cash for an amount exceeding rupees 2 lakhs. If contravened, 100% penalty will be levied. Number 7, TDS at the rate 2% will be applicable on cash withdrawals exceeding rupees 1 crore. However, if ITR is not filed for preceding 3 financial years, the limit comes down to rupees 20 lakhs. TDS at the rate 5% is applicable if the amount exceeds rupees 1 crore. Number 8, the limit of audit of accounts increases to rupees 10 crore if cash transactions do not exceed 5%. If transactions exceed the limit, the accounts of the person becomes liable for tax audit. My friends, I hope by following these tips and staying committed to your financial goals, you can maintain control over your cash transactions and work towards achieving financial stability and security. Thank you very much for watching the video, and God bless you all.